Hey guys, my name is Katie and I work for Credit Innovation Group. A couple of weeks ago, we launched a poll in our CIG members only Facebook page asking you guys what you would like to know more about or a question that you would like answered. And the number one question that got the most votes was, what is the credit score that I'm going to need to get into a mortgage? So we are going to unpack that today. Now, it's going to be a couple of minutes and it is pretty complicated, but that is this journey that we're on. It's a ton of work and it's a lot of stuff to navigate. But if you will understand it, you're going to be feeling way more prepared to deal with the entire process and to actually go through the mortgage funnel and get into a home. So let's get started. But before we do, let me disclose some stuff. I'm not a financial advisor. I'm not here to advise you on mortgages to accept. I'm simply going to teach you about different loan products and the things that we know are requirements to get into those. I am a licensed loan officer, but I'm not an active loan officer. I'm not currently originating. So what I'm telling you comes from industry experience and also information that a lot of you can actually Google. But I'd like to lay out a couple of the different reasons that this question is so hard to get a straight answer to, okay? And in order to do that, you're going to need to know a couple of things. The first one is the difference between your Vantage score and your FICO score, all right? So if you are a member of CIG, which you are, or you've been a past member of CIG, you can log into your portal and go to Score Watcher. Score Watcher is where you will see your TransUnion Vantage score, okay? The Vantage score is a score that is compiled and produced by the bureaus themselves. So TransUnion, Experian, and Equifax all create their own Vantage score. Vantage scores are often provided to you for free by credit card companies, your banks. They can be they're on Credit Karma, and they're all produced by the same place. So Score Watcher's score is just TransUnion Vantage score. I know that creates a lot of confusion. We have a lot of people saying that CIG score is one thing and a different score is another thing, but we're all getting the score from the same place, which is the Vantage score. Where you're seeing the most difference is between Vantage and FICO score, okay? FICO stands for Fair Isaac Company, right? Not because they're fair, but because they were established by two people by the names of Mr. Fair and Mr. Isaac. So Fair Isaac Company is an entirely separate company from the bureaus. What they do is they take the data that was reported to the bureaus and they calculate what is called a risk score. Okay, that score, which is that 3-digit FICO score, right? Credit score, that is supposed to tell a lender your likelihood to repay a debt. All right, so it's supposed to be looking at your credit history, your habits of making your payments, your credit mix, if you have experience with that before, and see that you're going to make those payments consistently. If you have had a long history of making payments consistently and on time, and also you don't overutilize your scores, you're going to have a pretty good credit score. But if you have a short history of it, if you have late payments, if you have collections or judgments or charge-offs, or anything that shows that there might be a behavior of not paying your debts back, that score can get really low. And a low score indicates a high risk of you not being able to pay for your mortgage. Okay. And to jump into this a little bit, a lender is held responsible by the loan programs that they get to work with. That if a loan program with a certain lender has a high default rate, meaning they keep giving loans to people who are defaulting on their mortgage, they can get shut down by that loan program. And the reason they do that is because it's the lender's responsibility to look into your profile and dig through everything that you provide for them, which we'll get into on another call because it's a lot, to prove that you can actually afford the mortgage they're about to give you. And they are held responsible for that, right? So that's why it's vetted so heavily. So what does that mean for how to get into a mortgage? Okay, this FICO score has many models. Like I'm aware of 18 of them. There's more than that though. There's really 3 or 4 really common FICO models that lenders use, but even those are different from lender to lender. Lenders who provide the exact same services and products. And so when you are wondering what your FICO score is, or when you're wondering why your lender has a different score than what Score Watcher had or what Credit Karma had, it's because it's an entire different equation, taking the data that you have on your credit reports and turning it into a number. I say entirely different with one caveat. They look at the same data. So those scores should be trending in the exact same direction. So I'm sitting here telling you that your FICO score is not going to be the exact same as your Vantage score, yet we still use Vantage score. The reason we do that is because it doesn't hurt your credit at all to go check your Vantage score. especially not with Score Watcher. And it gives us a trend of what your scores are doing. Even if we were to do a FICO score and in a way that it wouldn't hurt your credit, which can totally be done, it still doesn't tell us what your lender sees. So for us, we give you the bureau score directly from them to help see how your scores are trending. Because if they're trending up or if they're generally in a certain range, you can usually bet that that's where your FICO score is at, or at least what it's doing. Now, that is with one exception, which is that if you are making a lot of moves on your credit, applying for new credit, paying down debt, if you're in credit repair, you can see big fluctuations on your score that are usually quite temporary. And when I say temporary, in all things to do with credit, short term is 30 days, long term is like 120, 180 days, right? Credit is a long process. So, with that in mind, let's talk about the actual requirements, okay? Mortgages are going to use FICO models, and those are usually going to be different. That FICO model has a score, it's the 3-digit score. It's referred to as a credit score, right? Your Vantage scores and your FICO scores are all considered credit scores. That's why it's so confusing, because when people say credit score, they may actually mean two different things. But when you go and apply for a mortgage, the very first thing they do is pull your credit score. And that's why we talk about scores so much at CIG, because it's the very first thing that allows you to even start the conversation, right? If you have bad credit, you can't even continue through the process. If you have good credit, now there's a lot more to take into account. Like, do you have a down payment? Do you have employment history? Can you actually afford the mortgage? Is the house that you're buying worth buying? Right? Those are all the things we're going to dig into once this score item is settled. All right. Now, that's what CIG is committed to do, is we want to see it all the way through to the end. And so the score is just the first step. And so while we're working on score, there's other stuff we need to be working on as well. But again, this is about what credit score you need to work with the lender. So I'm going to give this to you as straight as one can. There are two FICO requirements, okay? One is established by the loan program. For example, FHA, the Federal Housing Administration, has a loan program, which is FHA mortgages, right? And they allow you to have a 3.5% down payment and a less than perfect debt to income ratio. And they're doing that because when you get an FHA mortgage, you pay something called mortgage insurance. Now, that is not insurance for you against your mortgage. That's insurance for your lender against your defaulting on your mortgage, okay? So FHA, for a very long time, didn't have a FICO requirement. Like, there wasn't one to be found. They recently, in the last 2 or 3 years, put in a FICO requirement at 580. Now, many of you are probably saying, 580, I should be able to get a mortgage then, right? But what you have to understand is if your scores are at 580, you have to have a lot of other factors. For example, if you get down to 580 for an FHA loan, you have to have an at least 10% down payment. You also have at least 3 to 4 months or 2 to 3 months. There's a lot of different rules here. Of mortgage payments in your bank account that you're saving, and you also have to bring cash to closing that are just going to cover your closing costs. You'll also be accepting a higher interest rate, so your loan will be even harder to qualify for because your mortgage payment will be even more expensive on the same amount of money that you have to use right now. Okay. The second piece that you have to look for is what the lender overlay is. So many of our lenders don't allow an FHA mortgage to happen with scores less than 640. 640 is a really good number for you to wrap your head around, because if you can get your FICO scores over 640, which we think means like 650, 660 for Vantage scores, maybe even 670, then you have access to a lot of FHA's programs. If you get them as high as like 680 and 720, you can access FHA's programs and some grant assistance programs or down payment assistance programs, okay? But one thing I want to help you take from this is the reason that there's not one simple answer is lenders decide many of these items, all right? During COVID, there was a huge influx of people trying to refinance their houses or buy new houses. And when that happened, many of the lenders we worked with took their FHA credit score requirements from 640 to 680, and some went even higher than that. Now, many of them have since pulled back. Some of them never made that move, but it's entirely dependent on who the lender wants to work with, which is one of the things that we have a huge issue with, because we don't think that you should be treated unfairly just because of your credit score. It's unfortunate, but if you have a bad credit score, you're a lot less likely to get help from a mortgage lender, even if it's just to understand what it is you need to do to fix it. And so for us, what we're trying to help you do is get your scores as high as possible to alleviate all of these mishaps that can happen through the mortgage process. So let's talk about that, right? If you have lower credit scores, you have to have dramatically more money. All right. That can be tough because when you have bad credit, the first thing that takes a hit is your cash flow because you're spending more money on the same thing that someone with better credit is spending way less money on. So if you have to have a ton of money to get a loan with bad credit, there's very few people who are going to qualify for that. Bad credit creates not having a lot of money. That's what happens, right? So if you want to have, if you don't have enough money to go put a 10% down payment, or you don't have 3 to 4 months of savings in the bank account, then what you can do is get your credit score to be really powerful. If your credit score is really powerful, there are many other programs in place that allow you to do no down payment programs, or things like your debt to income ratio can be lower, or sorry, can be higher. Because if you can prove a history of being able to manage the debt that you take on really, really well, your risk higher is lower. Your risk model is lower, which means your credit score is higher. All right, I know that's confusing. Let's talk about a couple other loan programs. So FHA, technically they can do 580 to require a manual underwrite, a huge down payment, a bunch of cash to close. Most lenders are going to be interacting with FHA loan around 640. Some even go down to like 620. We work with some who go all the way down to 580. Some of them go all the way up to 680 or 720. And then they have additional requirements on top of that. For example, some will require a manual underwrite, which means instead of in addition to looking at your credit, they make you provide credit history, like 12 months of canceled checks, which is a really common requirement among all loan programs. And any other bills that you can prove that you paid consistently on time. Manual underwrites have a smaller chance of going through, partially because they're trickier loans, and the other part is because they're way, way, way more work for a lender. And right now, lenders have a lot of business. So it's our customers who tend to get the short end of the stick. What we do to help make up for that is if we can help people build a really powerful credit profile, all these things become easier. For example, there's a loan program called USDA, U.S. Department of Agriculture. That's, again, a department. That's not the loan program. But they offer a loan program for rural housing. And rural is considered like 88% of U.S.'s territory. And if you are in what's considered a rural area, which is really just, a pretty suburban area, you can actually get a loan for 102%, which means they're willing to finance the entire loan and your down payment and some of your closing costs. But you have to have really powerful scores, like at least 640. They prefer to see it over 680, even up into the 700s. If you can do that, that's a program that's available to you. If you're a veteran, there's something called the VA, right? The Veterans Administration. They have a loan program as well. And they provide a certificate of eligibility where for one time you can buy a house and not have a down payment. That is really helpful if you're a vet. But if you're not those things, you don't live in a rural area, the most important thing for you to do is get your credit to be as powerful as you can, because credit is a lever. And the more powerful the lever, the more you can move with less money. All right. And I really want to help you guys understand what that means. If you have a lever that's not powerful, it takes a lot of work to move very little. If you have a powerful lever, it takes a little bit to move a very lot. And that's really what your credit is. So if you have a ton of cash and bad credit, start talking to us. We can help you match up with, certain lenders. It's going to be it's going to be really difficult still, as every mortgage is, but we can do that. If you don't have a ton of cash, you don't have a ton of down payment, your cash flow is struggling because you have bad credit and bad credit eats up cash flow, then you need to work with us to really increase that credit score so that you can get into a home. I hope this was helpful. I know it's so confusing. I wish there was one answer I could just give you and it would solve that for you, but it's a very dynamic, hairy process, and the best shot you've got is sticking it out with us, asking us your questions, and making sure we can help you navigate all these different minefields. Remember, it takes a long time to get some of this stuff done. And when I say a long time, I might mean months to years, but it's worth it, because if you can purchase your own home with a mortgage, you can finally outrun ever increasing rent and start creating real wealth for yourself. And having a mortgage on file builds your credit faster than anything else. So stick it out with us, help us understand the issues that you're dealing with, and work with your credit specialist, call our customer service team, make sure that you're taking the steps that we're recommending to build your credit and optimize your credit. And if you can do that, this thing can happen for you. But Like I said, it's going to take a lot of hard work, and that's what we all signed up for. So thank you for trusting us at Credit Innovation Group. And also thank you for watching this video if you made it all the way through to the end. I hope you'll let me know if this answered your questions, created more questions for you. If it wasn't helpful, all feedback is good. And then anything else you might be wondering, go ahead and leave in the comments, and we will have our moderators all over it. Thanks, guys.